All right, welcome to the very first live episode of Whiskey and Wealth Tech. We're here at the First Rate's WealthTech Connect Users Conference in Dallas, Texas. And so I'm your host, Alex Serman, and I am joined today by Martin Tarlie and Matt Kadnar of Nebo Wealth. Guys, thank you for being here.
Thanks for having us.
Thank you for having us.
So tell me a little bit about introduce yourselves a little bit. What is Nebo and who are you guys?
So I'm Martin Tarlie. I'm one of the founders of Nebo.
I'm Matt Kadnar. I'm a co-founder of Nebo.
So what is Nebo Wealth? Nebo Wealth is a goals-based portfolio optimization engine. It takes financial planning inputs from an individual client, combines that with investment information from an advisory firm, and does advanced wealth optimization to build a portfolio to maximize the likelihood that the client achieves their goals over their entire lifespan. Now, one of the questions you might ask is, how did we get into the goals-based optimization world? And it actually started back in 2013. So Nebo is incubated in a large asset management firm. And we got a call from a corporate client who said, we're doing more and more work in the retirement space. We're thinking about investing in glide paths. Maybe we'd like your thoughts on glide paths. So we looked into glide paths. Nobody was really explaining how they were building them. That motivated us to actually go back to first principles and think about what is the risk that an asset owner faces. And what was intuitive to us, that the risk the asset owner faces is they don't have the money they need when they need it. And that just naturally led to a goals-based approach, which, so from our perspective, all investing should be goals-based investing.
Excellent. Well, before we get too much into the wealth tech part of our topic, let's talk about what we're drinking. So this is Whiskey and Wealth Tech, and so here we've got our branded Whiskey and Wealth Tech Glencairns, and we're drinking the First Rate private labeled whiskey. So this is something that First Rate's, I don't know how I got permission to do this, but did. We bought a barrel from Andalusia Whiskey Company down in Blanco, bottled it ourselves, and are now being able to share this with our clients, our coworkers, and our communities. And so let's dive right into this whiskey here.
Cheers.
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 So this is a really unique whiskey because it is a single malt, so kind of Scottish, Irish style whiskey. However, it's aged in a new oak barrel, which is more of a bourbon style. So you get this really interesting characteristics with it. It is cask strength, so a little strong, a little spicy. But what do you guys think of it?
I love it. I also like my whiskey on the rocks.
So yeah, with the cask strength, that helps dilute it a little bit, add a little bit of water, and then as the ice starts melting, it actually breaks up the molecules in the whiskey and just adds some different flavors to it, changes it a little bit. So what you're tasting is a little bit different than what Matt and I would be tasting with the neat pours here.
And while I do enjoy bourbon, I tend to be a Negroni man myself, but I'm going to go with the spirit of the evening.
Excellent. Well, and so you've talked about what is Nebo, where you guys got started, how you got kicked off. And so with your main mission of being helping investors have the money when they need it, you've done a lot of research and studies into investor behavior. What have you found that's been interesting and has really helped drive your strategy with that?
So the single most common piece of feedback we hear from investors and advisors as well about the impact that Nebo has on them is increased confidence. And Dave Kadnar from InvestSuite talked about this before, and we believe this is all related to understanding. So at the advisor level, what Nebo allows the advisor to do is understand what they need to believe in order to own the portfolio that they do for the client, what they need to believe about the client and what they need to believe about the capital markets. And that combination helps them elevate their advice and increase their value to advisors. Now, on the client side, it is also related to confidence. And that confidence is born through understanding, okay, I have a financial plan, I have a portfolio, I have goals and objectives. What happens if I change those goals and objectives? What does that do to my portfolio? What does that do to my probability of achieving those goals? And at the client level, what is so powerful, we know this through behavioral finance studies, that if you increase understanding, you reduce emotions. And that combination ends up leading to better decision making. And ultimately, this entire package, we believe, what we hear from Nebo advisors, it leads to improved life outcomes for clients. And that is, we're very mission driven, and that's why we come to work every day. And so that feedback, confidence, bordering on relief, which one advisor said, we thought was super cool.
Oh, that's amazing. And so you talked about Nebo advisors. Are advisors the primary users of Nebo, or who's using this tool, and how do you help link this between portfolio construction and client reporting?
So I think in order to answer that, it's helpful to sort of think about where Nebo sits in the advisor workflow. So Nebo sits squarely in between the financial planning process and the investment process. And there's a gap, there is a disconnect in the market now between planning and investing. So because Nebo sits squarely in between those two, there are natural use cases where the primary user is more on the investment side. There are other use cases where the primary user is on the financial planning side. So I'll give you an example of a use case in which the primary users are on the investment side. So we have a firm that we're working with, ultra high net worth focus. They have a lot of clients who own a lot of private assets in the drawdown vehicles. So what they need help from is they need help on the capital pacing for investing in these private assets, but they also want that to be fully integrated with their liquid assets and within a goals-based framework. So the primary users there, because of the complexity of the investments, are really the people on the investment side.
We see a wide range of use cases for Nebo clients. Now, the other end of the spectrum for what Martin's talking about are the mass affluent clients. And I think this is a significant pain point for firms. They are important clients, but they also, the time required in order to provide some level of personalization for those advisors, those clients, is very difficult. So what we often see is using Nebo as a goals-based model selecting tool, and that can be managed by the financial planner, or sometimes that's from the investment side of the office as well, to help provide a level of personalization for those mass affluent clients, but doing it in a way that is more profitable, it's quicker, it's more efficient, and it allows those advisors or the investment professionals to focus on kind of higher net worth, ultra high net worth, where they're more profitable and they're more complex clients.
So you guys really help with that personalization. We've talked about that a lot at this conference, of the trend of personalization within wealth management and how you guys help achieve that. And so you're really adding a ton of value to advisors on making sure they're efficiently handling that, while also adding value to their own clients of being able to invest in a better way. And so you guys have your kind of proprietary wealth benchmark that you create. And so tell me a little bit about that process and just what that conversation looks like before using Nebo with a client and advisor, and what's that conversation now that they have the technology that you provide.
Right. So the standard paradigm now is a client comes in, they go through the financial planning process, which is really a goals-oriented process, whether you call it sort of goals-based or cash flow-based. From our perspective, that's all the same. You're trying to understand what the needs, wants, and wishes are of these individuals. But then what happens after that process, they hand them a risk tolerance questionnaire. And the risk tolerance questionnaire, it generates a risk score. And if that risk score says 63, that client gets put in a 60-40 portfolio. If you change the financial plan, you don't change the portfolio because the risk score didn't change. In our approach, we start with what are the goals and objectives of the client. So it's a question of how much money do they have now? How much are they going to be saving and spending over time? What are their legacy desires? And based on that, we can actually plot out over their future lifespan what's the minimum amount of wealth that they are going to need in order to achieve their goals. We call that the wealth benchmark. But it's a personalized wealth benchmark because it depends on the characteristics and the needs, wants, and wishes of that individual. And then our optimization is really designed to maximize the likelihood that their wealth is above that minimum required personalized wealth benchmark.
And that trend towards personalization, if you go to any conference, it is the topic, is one of the topic du jour, alts probably being the other one. And when we talk about personalization, in our lives, whether it's my Netflix account, whether it's my Kindle, whether it's my Dunkin' Donuts app, in ordering coffee in the morning, personalization is everywhere. And so obviously it's not a surprise within the wealth tech space. It is, I think, probably the biggest trend that we see. The issue that we see, personalization from the planning side, the goals-based financial planning tools, Money Guide, eMoney, they've been around for 20 to 30 years. Those are excellent tools for providing personalization on the planning. What happens on the investment side, however, and this is something that Marshall talked about earlier today, personalization on the investment side is primarily through implementation. So it's direct indexing, it's custom indexing, it's tax loss harvesting, all very powerful tools. Now, Martin and I have an asset allocation background, and the seminal paper was written in 1986 about the importance of asset allocation. It dwarfs the implementation in terms of delivering on a client's goals and objectives. And so the industry, generally speaking, has really lagged with personalization at the asset allocation level. And so it's a real struggle for firms, because if they want to personalize at the asset allocation level, it is spreadsheet hell. You're doing this one at a time. It's impossible to scale. So what happens? You end up adopting model portfolios. Again, another incredibly useful tools. But every one of those models, there's thousands of models out there. Every single one of those models has one thing in common. They know absolutely nothing about the client. And that is where I think this personalization really falls down, and that's where Nebo steps in. Personalization in terms of what are your goals, what is the optimal portfolio to satisfy your goals, or what is the optimal model from an array of models in order to satisfy those goals. And that it is just the natural evolution in terms of personalization, but it's really the asset allocation side that the industry, I think that's where we can really improve upon.
So I want to elaborate on that a little more. The use of models is extremely powerful, and we think that's a trend that is definitely going to persist. But obviously there are inherent limitations with models. But what we can do is we can start with that kind of standard model portfolio. Think about that as a core. But what if you own a private business? Or what if the advisor wants to sprinkle in some other investment options around that kind of core model? Well, we have the capability to introduce satellite investment options, and those could be outside assets, they could be a private business, they could be alternatives. The client might come in, actually we're seeing this more and more, they may own Bitcoin. So how are you going to handle that? Are you just going to ignore it? Or are you going to include that as a held away outside asset and then inform the rest of the portfolio that that thing exists? And so you need to account for that. So we have the capability to do kind of a models of models approach, where you have a kind of standard model as the core of the portfolio, and then enhance that with satellite strategy.
And I think the real power with that, like one of the other things that firms struggle with is, particularly with these RIAs that are aggregators, they're acquiring more and more firms. They promise advisor autonomy. Makes total sense. But then they bring them on board, and then they have an issue with respect to enterprise-wide risk management. And so how do you balance that? And so what Martin described, this model of models, what that does is provide a freedom within a framework for advisors. So you can give them guardrails. You can give them options in terms of how you can personalize and how you can customize those portfolios. But you do it within a structure that is systematic in terms of how you ultimately end up allocating the portfolio.
And so we've talked about a lot of the trends that we're seeing around personalization, around what kinds of tools that can be used, and where we're trending with that. What other trends are you seeing, or what are things that you would want, people here in the room today, listeners that'll be listening to this podcast, what do you want them to walk away with?
So a big trend that we're seeing, and then we'll get back to what do we want to walk away with. A big trend that we're seeing is really on the alternative side. So really the growth in alternative assets. It's not just 60-40 is enough. It's the growth of alternatives. Those could be private assets. They could be digital assets. We're seeing a lot of demand, especially on the insurance side, for how do I account for things like annuities? And so can you have a comprehensive framework that can handle not only different client types, from the mass affluent to the affluent to the high net worth to the ultra high net worth, which Nebo can handle, but can you handle the very wide array of investment options? And so the framework of risk is not having what you need when you need it provides that kind of comprehensive framework that can straddle the client types and also the different asset types. I don't know if you want to add to that.
Yeah, on the alts, I mean, it feels like they are a bullet train coming right down the track, right at us. And I had an advisor say something to me last week, which I thought was incredibly powerful. She said, I don't need any more product. I don't need another private equity fund. I don't need another private credit fund. What I need is a tool to help me determine how much of those alts I should own for each of my clients. And I thought that was incredibly powerful. And, I am a reformed attorney. I don't like to don't like to admit this, certainly not, in a recorded forum, but I did spend 6 years as an attorney, two of which were at LPL. And I really do believe that this is a growing compliance risk for firms. Why did you put this client in this private asset, this illiquid asset? How did you determine how much of that asset to own for the client? And, I did arbitrations, NASD, like all of those fun things back in the day. Kind of gives me nightmares sometimes. I'm almost over it, but I still deal with it. But, the finger in the air is not anything I would want to go to an arbitration with. That's not a winning strategy. And so having a robust institutional grade tool to help the advisor make those decisions with the client, we think, it should be table stakes. It will be increasingly in table stakes as we move forward.
Yeah, that's something that, we talk about alts all the time, that there's just this growing trends of that being so much more of clients' portfolios these days. And that doesn't come up all that often, of how much risk, not just from an investment standpoint, from an arbitration standpoint, are you actually doing the due diligence needed to make sure that you're investing in the right things for your clients? And so that's a really interesting point there.
So in terms of what I would want people to walk away with is, at the highest level, there is a better way. And we think Nebo is a part of that solution. But it's also important to realize that it's not free, right? It's going to take effort. And part of that effort is there's a conceptual change, that instead of thinking about starting with the asset allocation is an output of, once you have specified the investment options and you've specified the goals, then the asset allocation is an output of our optimization process. That mindset change takes effort, and there's a cost to going through that. But our users are coming back and telling us that the juice is definitely worth the squeeze.
Absolutely. And that kind of reminds me of, one of the things we do at First Street is we go through, we call it Covey training, looking at the Stephen Covey, 7 principles of highly effective people. And one of it is thinking with the end in mind. And that's what you're helping people do, is what do I want to get? What are my goals, and how can I achieve it? So you, instead of just starting with, okay, what's the allocation? What's the risk questionnaire that doesn't actually help anybody, but what do we really want to achieve, and how are we going to do it? So I think that's an incredibly powerful statement to make.
Can I just comment on the juice, as it were? So what is the juice that Martin talked about? So when I think about the benefits of Nebo, I think first and foremost, it all starts with the client. Improving life outcomes. That is, it's why we get up in the morning. It's why advisors do what they do. It is, it is job number one. But I think if you kind of go back from that, at a firm level, when we talk to these firms, what they're all trying to do is competitively differentiate from each other. And so the risk score to model 3 process that Martin talked about, I would say that is the median process for advisors today. And they're trying to do something different. They're trying to do something better, but they're not quite sure what. And so having a process, a goals-based process, systematic, similar type clients in similar portfolios, different clients in different portfolios. That message is very differentiated. And so we had an advisor say to us, with Nebo today, it's like when I'm going into an open house. It's the difference between telling a Home Depot flip, which you can tell instantly, versus that custom crafts home. And so that competitive differentiation is super important. We touched on the compliance angle before. The number of firms that have told us we have 90% of our clients in the moderate model, and they know it's not right. That is an issue for clients. And so reducing enterprise-wide risk management is really important. Then if we move down to the advisor level, the ability to increase wallet share at 3 times the industry rate, to increase referral rates at 2.5 times the industry rate, to increase close rates at almost double the industry rates. That's the juice that we're talking about, both at the firm level, at the advisor level, and the client level. It's super fun. Yeah, I'll just stop there. Maybe it's the whiskey. I don't know.
Well, I know we can keep talking, all day long about this, but
can I ask you a question?
You may.
So Martin and I met Alex, I don't know, a year ago. It was a little while ago. And so, Martin and I do our song and dance here. And sometimes that lands with clients, sometimes it doesn't. So it obviously landed with you. So what was it about Nebo that you said, all right, I want to find out more about this?
So I have 2 answers to that. One was from a technology vendor standpoint. One was from a personal one. So from a vendor technology standpoint, First Rate has tried to do goals-based reporting in the past. So in our client reporting platform, it was a very manual process to input goals, be able to track that to the performance, and seeing what you guys have done with how you construct these wealth benchmarks, how you construct these portfolios, really resonated with me that this was the missing piece that First Rate needed to be able to provide better reporting to our clients of not just, hey, you're beating the S&P 500, that's all well and good, but if you can't retire on time, then what's the point? But with you and what you're able to do, we're able to better measure to a benchmark that actually makes sense to clients and really takes their personalization and consideration in. And so that really struck with me. And then also reading some of the articles that you guys have done, you've done a lot of thought leadership talking about these risk scores and that, you fill out the questionnaire and it just puts you into a model. Well, I went through that process with my wife, and I vividly remember driving down the highway while she was trying to take this risk questionnaire, and the whole time she's going, I don't know the answers to any of these questions. What's the right answer? I'm like, it's supposed to be about you and not, there's no right answer or wrong answer. And she's like, she tried to quit on it multiple times. She's like, this is dumb. This doesn't actually do anything for me. And so at the end of it, we ended up almost the same model. And I'm like, I am well aware that our risk preferences are very different. And so to me, it's just something that in my personal life, this would have been more helpful to me than just that standard risk questionnaire and putting me in a bucket that I know I'm not fit for.
That's awesome.
I think that's one of the best endorsements that we've ever had. And it speaks to so we hear this a lot from advisors that it's very common in couples that they cannot agree on what their risk tolerance is. But what they agree on is what do they need and when do they need it. And that's what we focus on.
That's excellent. Well, I appreciate you guys being here, flying all the way down to Texas and doing our first ever live podcast. So thank you again. Thank you all to our listeners in person and online. And we will see you at the next Whiskey and Wealth episode.
All right.
Cheers.
Cheers.